Hello, good morning. Today we'll discuss about the basic terms in accounting or commonly used terminologies in accounting. I think it is better to understand all these basic terms which are used in accounting before starting the transaction or recording transaction or preparation of final account, like that practical side. So we'll discuss all these terminologies in one or two session, next one or two session. This session mainly intended for the diploma first year accounting students who are beginners. And also, I think as most of our students are Arabs, we can use some Arabic terms also. I will try to use some Arabic terms. I'm sure it will help them to understand the concept easily. Because those who are beginners may not have a clear idea, so it will take time to understand. So when some terms are used in Arabic, it will catch them, it will help them not to translate all the words, but the difficult or the basic terminologies. And also this session, I think it is very important because traditionally we are using many terms. Traditionally for long 10 or 20 years we are using. Now according to the new standards of SCCA guidelines or International Accounting Standard 1, there are some difference. For example, I just will give one example. For example, fixed asset. It's a term we use for centuries. Fixed asset, it's an asset which are permanently used in the business for a long time, and also which normally it cannot be converted to cash within 1 year. It is a fixed asset like land, building, premises, vehicle, furniture, fixtures, all fixed asset. We use fixed asset. But now IS 1, International Accounting Standard 1, it is the best term is non-current asset. And also the fixed asset terms is partially incorrect because we use the vehicle is a fixed asset. For example, vehicle is a fixed asset. All the features of fixed asset is there. It is it is used for a long time. It is not meant for resale, and it improves the productivity of the business and or productivity or profitability of the business, and all these features are okay, permanently used in the business. But the terminology is incorrect because the vehicle is not fixed, it is not constant, it is moving. So the terminology fixed asset, vehicle is a fixed asset. Actually the concept is correct, but the term used is incorrect. It is non-current, it is a tangible asset. This is okay, it is tangible, we can touch, feel and see that that it is tangible asset. But the term fixed asset is incorrect, but we can use the most appropriate term is non-current asset. Just like that, so many changes are there in terminology. So I think it will be those who are having for understanding about the terms also, it will be helpful. So we'll go to the slides. Okay, so we'll start from the business transaction or economic transaction or financial transaction or business transaction. These are synonymously used. So when we discuss about business transaction, normally we understand it is a transaction which deals with or which is involving buying and selling or exchange of goods and services for money, like that. But when we discuss, when we go in detail, what business transaction, it is a term used in Arabic is ma'amalatul tijariya, or financial transaction, ma'amalatul maliya, or the economic transaction. So whatever it may be, you can use. So there are some features for business transaction. First one is it's a transaction. First point is exchange of economic consideration should be there. A business transaction, there should be an economic exchange of economic consideration. It means it should be involved with inflow or outflow of cash. There should be an economic consideration. And another is it should affect the financial position of the business entity's financial position. Financial position, you know already, it is the assets and liabilities position. It should make an impact on the assets and liabilities. For example, we paid rent. When you pay rent, cash is decreasing and rent and expense is increasing. So both are having impact on the financial position. Cash in hand, the closing balance of cash or cash balance is decreasing. Rent, the expense is increasing. When expense is increasing, profit is decreasing. So all the financial income statement and balance sheet, all the financial statements are affected. Then another term is reliably measured. It should be reliably measured. It should be reasonable or reliably measured, or measurable in terms of money. For example, we can tell if a transaction, for example, you purchased 10 tables, or a building you purchased. So the price of the building or the price of the table is not mentioned in the transaction. It cannot be called a business transaction. It should be measured in terms of money. And also, it should be reliably measured. And for reliably, the term reasonably or reliably or accurately can be used if it is supported by documentary evidences. So, supported by documentary evidence like vouchers or receipt or cash receipt or any type of voucher should be there. So, it should be supported by voucher, reliably measured. It should affect the financial position. There should be economic consideration, economic exchange of economic consideration, and mutual exchange. There should be two parties. Mutual exchange should be there. And also there should be debit and credit. Debit and credit is actually, it is a very big topic, and we'll go, when you go to the accounting practical side, you will understand it easily. Now you understand debit, the receiver, and credit, the giver. There should be a receiver and giver should be there. Just like there should be a debit aspect and credit aspect should be there. So, and also all the transactions are done by business. For example, purchase, sales, payment of expenses, receiving income, or deposit money, withdrawal of money from bank, all this, taking loan from bank, all these are financial transactions because all the features are there. For example, you made a, for example, monetary is a financial position, or these two reliably measured. I will give one example. If a CEO of the company made a speech, in online speech session he made, he disclosed many things, and it made a favorable high impact on the share market, marketability of share, the price of the share, and it made an impact on profitability, consumers, everyone is impact, and made a good impact on financial profitability of the business. But there is no impact on financial position, because if, for example, if he paid, it makes an impact because cash decreases, so the cash balance decreases, so it can be treated as an advertisement expense or like that. So otherwise, it just made a speech and it made a huge impact on your profitability, but financial position and it cannot be reliably measured, the impact. So these features are not correct, not relevant. So it is not it cannot be considered as a business or financial transaction. So we'll go to the next. Next is capital. We'll discuss about capital. What is capital? Capital is actually a term, a very popular or commonly used term in accounting. Capital, the meaning is actually, it is meaning of capital is the money, maybe it is goods or assets or cash invested by the businessman. It can it may not be always cash. It may be goods or asset or cash invested by the businessman in the business. So capital is also capital. Normally it is in Arabic, it is called Rasul Mal. Capital, actually this capital and equity, both are synonymously used. In corporate undertaking company, it is called equity. In sole trading or partnership, it is called capital. So it includes not just cash in the amount invested or cash invested by the, normally we understand that money invested by the businessman in the business. It is not just money. It may be in the form of asset. It may be in the form of goods. For example, when you start the business, you bringing the building and vehicles, machinery, and also cash. So these all collectively called capital. So capital include all the current or non-current assets invested by the businessman in the business. Then we'll go to the, this is a very important asset. One of the most important term in asset in business or in finance is asset. Asset, normally it is called usul in Arabic. There are two types. It is fixed asset, usul sabit, and current asset, usul haliya. Current, that means floating or fixed, moving. It is not stationary. So the asset, first you have to understand what is asset here. Asset is actually the given is purchased. Normally we can understand anything. The things and properties owned by the business. It can be called asset. The things and properties owned by the business. Owned, the word owned is very important. O-W-N-E-D. Owned, ownership. If the business is doing in a rented building, the building cannot be considered as an asset because it is not owned. Or the mulkiya, the ownership is with others. So ownership, if ownership is not there with the business, it cannot be called business. So you can normally you can use the term that business or the asset is the properties, things and properties owned by the business. Or there is another, there are different terminologies. From that you will get a clear idea. For example, anything which can be realizable or which can be converted into cash is an asset. Another approach, anything which can realizable into cash or converted into cash. But here the acquired, purchased, loan having value and available to meet debt commitment legacies, like that is definition only. But you understand it in this way: the things and properties owned by the business or anything which can be converted into cash can be called asset. Now there are two types of asset that you have to understand very clearly. One is fixed asset, the asset which are used permanently in the business and which extend more than 1 year, which cannot be converted into cash within 1 year. It can be called long-term or fixed asset. Normally we call current, non-current asset. Now onwards we'll use that. This is a slide I use, the image is old. That is why fixed asset. But normally the better term is non-current asset. Non-current, current, non-current. So non-current asset is the asset which are permanently used by the business, and also or it cannot be converted into cash, asset which cannot be converted into cash within 1 year. And also like land, the three examples given: land, machinery, building, furniture, fixtures, vehicle, everything is current, fixed asset or non-current asset. So this is non-current. So some others, if you go in further or more detail, non-current, it have three main features. One is it should be permanently used in the business, or it should not be converted. It may not be, or it cannot be converted into cash within 1 year. Permanency. Second is it should not be meant for resale. If you buy an asset with an intention to sell it soon, or to resale. It is not a fixed asset or non-current asset. For example, you buy a car, you are a car dealer, you buy a car for your showroom, 10 cars you buy and for your showroom and sell it. It is not fixed asset or non-current, it is a current asset, stock. Because it can be sold, it can be realized into cash or converted into cash within 1 year. Anytime it can be, according to demand, anytime it can be converted into cash. So fixed or non-current asset means it may not be, it is not meant for resale, and also it should increase the earning capacity or productivity or profitability of the business, or the best term is earning capacity. For example, if you buy new building, new plant, new machinery, or new implementing new technology, it is all improve, or new land you buy for expand your business. It's all improve your earning capacity or profitability or productivity. But if you buy materials, more stock you buy, it is also an asset. More stock you buy, more production, more sales, your earnings, profit, your net profit, net income may be increased because volume of sales is increased, but capacity or productivity will not be increased. That will increase only building, machinery, land, new technology, if your renovation, expansion, like all these things. Even if you long or long-term advertisement, heavy advertisement, if you make, it will increase your profitability or productivity. It can also be called a non-current, or it is a deferred revenue, or a different term, but non-current, it comes in the category of non-current asset. So we'll discuss later this all. So another term is used is current asset. Current asset, actually the assets which are used for short period, which are not used permanently, and also which can be converted into cash within 1 year. There are so many examples. Cash is a most liquid current asset. Most liquid. Current liquid means easily, most easily you can convert into cash. Cash, bank balance, deposit or investment, short-term investment, inventory, and bills receivable, accounts receivable or bills accounts receivable, debtors, bills receivable. These all are current assets. Debtor is a person who owes money to the business. Bill receivable is also an asset. It is a form of debtor. Debtor and bills receivable collectively called accounts receivable. So these all are current asset. And also there are some representative current asset, like for example, prepaid expenses, rent you paid in advance. It's also a current asset. And accrued income, income due but not received. Sometimes you have services done already, or goods are transferred, but income amount is not received. Service is done, but income is not received. It is receivable. So accrued income, unearned income is also a current asset. So these are current asset. Now you got a clear idea about asset usul. And usul sabit, fixed asset, and usul halia, current asset. So one is asset means the things and properties owned by the business, or anything in a broad aspect, anything which can be converted or realized in cash. And fixed asset is asset which are used permanently in the business and which cannot be converted into cash within 1 year. And current asset means asset which can be converted into cash within 1 year and which are used for short time, which are meant for resale. Fixed asset which are not meant for resale. So like when you understand, when you go to the practical side, you will get clear idea about these all things. Actually, this session, if you have a clear idea about all these basic terms or terminology, it will help you when you go to practical session. Especially I told you in a new question pattern, 70% if multiple choice question. So you should have a clear idea about the terminology of terminology. Otherwise you will find difficult. So the question will be the HOT level. higher order thinking level. You cannot easily, if the terminology is not strong, you cannot easily understand the concept and you will be mistaken. And also the options, multiple choice options given will be almost similar, synonymous, or similar will be there. Similar, high degree of similarity will be there. So it will find difficult for you. That is why in new pattern, it is better to understand the terminology very clearly. That I think the main one of the main defect of studying becoming one of the reason for becoming accounting is a little difficult subject topic or the course. It is the main reason is the terminology, the lack of or the not, because you are not understanding the terminology accurately. That is one of the major reasons. So you have to understand clearly fixed asset, current asset, and asset. Now we'll go to the another type of asset, tangible, intangible asset. The main classification of asset is fixed asset or non-current asset and current asset. Now onwards, for fixed asset, even though we'll tell that we'll use fixed asset most often, but now onwards we'll try to use non-current, current. Now another types of asset is tangible, intangible. The term is used normally. Tangible means malmus. You can feel, you can see, you can feel or touch. Intangible means malmus. That means you cannot see, touch, or feel. So tangible, intangible. So this is a classification. Actually, almost all tangible assets, all current and non-current asset comes under tangible asset. You can see, for example, here given current assets, cash equivalents. This terminology also you have to understand. Cash and cash equivalent. Cash is any time you can disburse, you can spend. So it is a most liquidity is one of the feature of current asset. In balance sheet, you are enlisting the asset in the most of the balance sheet. You are enlisting the asset on the basis of liquidity preference. So liquidity, it is called in Arabic, it is called asuyula. So liquidity is one of the most important term used in Arabic. So most liquid asset is cash. Then cash equivalents. Cash equivalents means mainly bank balance. If you have bank balance also, you have to go to ATM and you can convert into cash. So easily you can convert. So the next best alternative, the most liquid asset is bank balance. And also short-term, very short-term securities you can easily sell. It's also included in cash equivalents. Anytime you can, blue chip securities. So these are cash and cash equivalents. Cash equivalents, mainly bank balance, and most liquid or easily short-term securities you can tell. And account receivable, I told you account receivable, another current asset. Account receivable is a sum total of debtor, creditor. These terms are very confusing term we have to understand. Debtor means the person who owes money to you because you sold goods on credit and he owes money. I will give one clear-cut example and make it clear later when we go to practical side. Now you understand the debtor is the person who owes money to you because you sold goods on credit or on account. And bills receivable. The debtor, it's a document just like check, bills receivable. Debtor, when you sell goods on credit, they give you check or bills receivable. It's a note, it's a negotiable instrument. You can transfer also, and you can encash after the maturity period. You will encash. It will be honored by the debtor. So this is our paying. So this is also a document. It's same as debtor. So debtors and some debtors, because I cannot believe everyone. For example, sold goods on credit without any document. So I need some document, so some security. It's a bills receivable. It's just like promissory note or I owe you. It's another document. I owe you. Just like It is a document. So bill receivable and debtor is collectively known as account receivable. So account receivable is also a most oftenly used term in what do you call HCCA course. Account receivable. So the debtors, sundry debtors, and bills receivable, it is not used separately. It is account receivable. The term is used. Just like I tell you, there are so many terms which is we are using for a long time. It is there are changes according to the revised standards. So account receivable, then stock inventory. Inventory is a best example for current asset because inventory is stock of unsold goods remaining at the end of the business is normally closing stock. So unsold goods, it is inventory. Inventory because it can be converted to cash. It does not mean it does not extended for 1 year. You need not wait for 1 year. Anytime, according to demand, it can be converted to cash. So stock is a current asset because easily or it can be convertible, and also it is meant for resale, and also it does not increase the earning capacity. Earnings may be increased, volume of earnings, not earning capacity. Then short-term investment. Short-term investment, I told you, the current deposit or any type of investment you made in some other companies or some any other financial institution you deposited, you invested money in short term. Short term means it can credit deposit, certificate of deposit, like so many commercial instruments, negotiable instruments are there. So it can be converted easily. You need not wait for 1 year. It may be for days or weeks or months you can convert. So these are all current asset. You should have a clear idea about current asset. More details of current asset you will understand when we go to the practical side. Now you understand what is cash equivalent, account receivable, stock or inventory. There are two type of inventory. One is opening stock or opening inventory, closing inventory. Because of closing inventory is unsold goods remaining at the end of the year. When business closing, you have this much. Then we go to the next year start, it will become opening inventory. It will be brought forward to next year. Next year, beginning January 1st, it will be the opening stock of the next year. So these all will study later. Now, fixed asset, building, machinery, computer equipment, tools, furniture, fixtures, vehicle, and all it is coming under fixed or non-current asset. It is all tangible. Now you have to understand it's a new term, intangible. Higher malmus, usul, higher malmus. That means you cannot see, touch, or feel some assets. For examples are given: goodwill, patent, copyright, trademark, brand recognition, business methodologies. There are so many else, but I'm not going to more detailed and make you confusion. You just understand goodwill, patent, copyright, trademark, brand also. Then business methodologies or business concepts, ideas. Nowadays, it is a very big business. To make the idea or concept or methodology and sell it, because many companies when making millions of dollars in US and all European countries making business ideas or concepts, they make heavy advertisement and make an idea, a new idea, and sell to another company to implement, to transfer this idea into product. So methodologies, brand is also trademark or brand. There are slight difference, we'll discuss later. Copyright is exclusive right of the publisher or the person to copyright, to sell them, normally copyright is used in the case of books and periodicals, books like that, journals. Then patent is more for product, and goodwill reputation of the company. For example, you buy an existing company, you buy for 500,000 real, $500,000 real. Now after 1 year or 2 year, you made a good profitability, a good image for the company, and you can sell it maybe 600 or 700 real, or 700,000 real, or maybe 1 million. If you made 2 years, if you made hard work, a heavy advertisement you made a brand image for the company, and goodwill you are selling for 1 million. So this excess 500,000 real is goodwill, reputation of the company. So goodwill is just you understand it's the reputation of the company. Goodwill is a very wide topic, and goodwill. Ismail Hassan, good name is normal. So we will discuss later in detail what is goodwill and all these things. Now you understand what is tangible asset, what is intangible asset means usul. Usul sabit, fixed asset. Usul halia, current asset. Tangible asset or malmus, and usul ghair malmus, intangible asset. Then we'll go to the next term, that is business. Actually, this slide I made in practical oriented. You're starting a business, we bring the capital, you buy the asset. This all with figures you can, but needed this whiteboard is needed. That is why. So business, and you buy the goods, and supplier, who is a supplier, customer. In that, when the practical approach I made, but anyhow, I'm not going to the with figures. That will in practical session will continue about that. Now, theoretically you understand the concept. Business, supplier. For example, supplier is a person, supplier or creditor. The person from whom you buy the goods on credit. There are two types of transaction you have to understand. Transaction ma'amalat tijariya, ma'amalat al-maliya. We studied before. There are two types we didn't discuss there. One is cash transaction, one is credit transaction. Cash transaction means the transaction with immediate payment of cash, delivery of goods and payment of cash, immediate effect, prompt payment. And on credit transaction means the payment or receipt of cash, delivery of goods is made immediately. One side of transaction, whether it is buying or selling, but payment or receipt of cash is postponed to a future days. Tariq Mustaqbil. Later, later you will make payment. For example, you bought goods on credit, and according to terms, after 30 days you will make payment. So it is a credit transaction. Or you sold goods to a customer or a what do you call buyer or customer, and he will pay after 20 days or 15 days. It's also a credit transaction. So just to make you understand this, I'll give a small example. For example, Ahmed is the businessman. He purchased goods from George, another businessman. For example, Ahmed is a manufacturer or the dealer of furniture. He has a shop in Miswa, this city. He buys goods from the Muscat or capital city Muscat. For example, another one, Majan Furniture is a big distributor of furniture, wholesale distributor or wholesale and retail. They have retail outside. For Majan Ahmed in Nizwa, he buys goods from Majan Furniture Muscat. For example, 25,000 Riyal goods he bought, worth of goods. And he brings to this shop in Nizwa and he starts selling. Now, Majan Furniture is the supplier or the creditor. Why he is a creditor? Because the business of our business, for us in our language when we are telling, he is a creditor for us, for Ahmed. Why? The businessman may be George or the Joseph in Majan. He is a creditor. That means the business owes to him. Maybe 25,000. We paid cash 10,000, and for 15,000 we gave him a bill receivable, a document. We'll pay the money after 1 month. So he agreed. Or without orally, we have an agreement. There is no written agreement, bills or promissory note. Now orally he agreed, I will pay the money after 1 month. So for the 15,000 is a credit transaction. It's a credit purchase. Now I sell this from I'm selling. I'm from my shop is Nizwa Furniture Mart. I have shop from this furniture shop, I sell goods to many people. One of the Mr. Ramesh, he's my friend. I sold goods to him for 2000 riyal. He told, I'll pay the money after getting salary. I agreed. So he's my debtor or my customer, or it can exact term is my debtor, because the debtor is the person who owes money to me, to my business. For me, he's an asset, it's a current asset, because he will pay the money within 1 month. For me, Majan furniture is a current liability, because I have to pay money within 1 month. So current asset, current liability, these are all terms you have to understand clearly. Or the supplier, the person who supplies goods, or who has to get money from business, or business owes to him, and customer or the debtor is the person to whom business owes. Sorry, who owes to business. So these are the also there is carriage inward, carriage outward. For when you are buying, when I'm Ahmed, I buy goods from Muscat and bring to Nizwa, I have to pay transportation charge. Normally it is called carriage inward, because it is for bringing goods to my site. It is before production, before sale. So carriage inward is a direct expense that all we'll discuss later. And carriage outward is if I want to sell this, if I have to bring these goods to the market, sometimes I have to home delivery I have to make. So I have to supply this. So transportation charge paid for supplying these goods to customer is called carriage outward. Carriage outward is an indirect expense. It's a part of profit and loss account or the indirect expense, and trading account. Carriage inward is a part of trading account. So anyhow, these all details we'll discuss later. Now you understand who is a supplier, who is a customer, who is a creditor, debtor. Carriage inward, carriage outward. Carriage inward means the freight. Actually, carriage inward in Arabic it is called naql. Freight, the charge paid for bringing the goods to the business, and the carriage outward is the freight paid for taking the goods or selling the goods to the customer. Then now we'll go to the what is goods. This is also a term which is sometimes confused. Goods and asset. For example, goods are bought for producing other. This is another definition. There are two types of goods, but we'll go to the accounting definition. Goods. In accounting, goods is the goods purchased for resale. The goods or purchase of goods, purchase of you buy anything in which the business is dealing. It is called goods. So goods is always asset and goods are different. For example, mine is furniture business. I have a furniture business in Israel. So I buy furniture from Majan. It is my goods. Why it is a goods? Or it is my purchases. It is called purchases or goods. It is my expense. Consider it's not an asset. It's an expense. Why it is an expense? Or it can be called some others it is a current asset. Anyhow, it is not a fixed asset. So why it is called current asset or expense? Because it is meant for resale. So the best explanation in accounting terminology, the goods is the things or properties or anything you buy for resale, or it can be converted in cash within short time. But assets, if you buy one furniture, one table, especially exclusive, one table you buy separate, it is for use in the business. You in your office you want to use, or one AC you buy for your business, it is your asset, fixed or non-current asset, because it is used for a long time. For example, if you are for example, mobile shop you have, or vehicle, you are dealing with vehicle, car. You buy car is goods because it is meant for resale. But if you buy for one furniture for your office or fixtures or any type of AC or anything you buy, laptop or system you buy, it is your fixed asset. It is all your fixed asset except the car, which is meant for resale. Just like that, what the goods in which you are dealing, it is your purchases or goods. Other all things you buy for a business, it is your asset. So this is the classification. Another classification: consumer goods, capital goods. For example, if you buy the goods for consuming, as it is, for example, here shoe, banana, dress, and all, you consume it, you use it. It is called consumer. This is terminology in marketing terminology actually. And capital goods are the goods. If you buy one machine, you buy one tractor or machine or something for making the goods. For example, one machine you buy to make the furniture, to make the furniture. For making the furniture, you need to buy equipments or tools or machines. So machine is a capital goods. So the crane, these all things under like that. That is actually different classification. That also you have to understand. Consumer goods, FMCG, you may be here, fast moving consumer goods. So these are all coming under consumer goods. Capital goods means you buy the goods to make another consumer good, for producing another goods. So this is a classification, but our classification is mainly the goods means the things in which the business is dealing, or the things or anything you purchase with a meaning, it is meant for resale, it is goods. Then another terminology is direct. There is direct expense and indirect cost. Indirect expense. The expenses or cost may be direct or indirect. That's also very important to understand. Most often it is in when you are using accounting, computerized accounting system like Tally, History, or QuickBook, or any system in Tally or any accounting software. If you are using, you have to correctly classify what are direct expenses or indirect expenses. That's different heads or groups are there, so different treatments. So you have to understand in manual accounting also, you have to understand what are it depends upon your nature of business. In manufacturing business and trading business, in trading business most of the expenses will be indirect, but in manufacturing business there will be many expenses may be indirect. Normally, normal classification is all the expenses up to the conversion of raw material into finished goods. All the expenses met by the businessman until the conversion of raw material into finished goods. It is direct. After conversion of raw material, even the goods is produced, you want to pack it, packing, warehousing, storage, all this from there to start, all everything, advertisement, insurance, premium, salaries, rent, office maintenance, all these expenses indirect, or all the expenses relating to administration, marketing, all expenses, everything related to all this are called indirect. But up to the conversion, for example, I told you carriage inward, for bringing the goods, you buy the goods, it is called cost of goods. For example, the purchases, the cost of the goods you bought, purchases, plus carriage inward is a direct expense, and you are buying, sometimes maybe for importing goods you have to pay dock duties, and sometimes import duty or taxes you have to pay. After that you bring the goods to your house, your site. After that, all the productive expenses. If it is a manufacturing company, you want to produce from this raw material, you have to produce finished goods on different stages, machinery, machine, all the expenses relating to machine, productive wages and machine charges, sometimes depreciation of machine, and all this. If it is particular clearly given depreciation of machine, you can deal it as a direct, and all this factory rent and everything related to production. We will discuss one by one in next slide. What are the probable direct expense, and up to conversion. of if you keep the raw material, that means material before production you keep in store, warehouse rent, storekeepers wages, salary, all this coming under direct. But after producing, your godown or store, you are keeping this, or godown rent, or warehouse where you keep after product finished goods you are keeping, so godown rent, and store warehouse keepers salary, and insurance of warehouse, all these things, and packing charges, advertisement, from there everything, administrative expenses complete, accounting or cleaning, stationery, rent, warehouse rent, electricity, water, transport, everything, it comes all marketing expenses, all marketing, advertisement, salesman salary or commission, whatever it may be, all these expenses are indirect. So very clearly you have to understand all the expenses, direct expense, up to the conversion of raw material into finished goods. After that, all the expenses after, or the expenses which are up to the conversion of raw material into saleable goods, finished goods or saleable goods, all the expenses, other expenses, or indirect, it's called indirect expenses, normally it is called overheads. Actually the term, the masrufat غير مباشرة, نفقات المباشرة and غير مباشرة, direct, indirect. So anyhow, this is a very important term to understand. What are the things, what are the direct and indirect expenses in, and it's in, if you, especially if you are using what you call accounting softwares, any type of accounting softwares, it is very important to understand what are the direct, especially in manufacturing company. In trading company, normally what you are doing, you buy the goods and sell it, the same goods. Not, there is no manufacturing or industrial process, must not, industrial process are not there. So trading company, almost every expenses are indirect, but in manufacturing company or industries, must not. There may be many expenses direct, and some expenses, indirect expenses also may be many. So we'll go to the next slide. Yeah, direct expenses. This also will make clear direct and indirect. Then the rest of the terminologies or terms we'll discuss next session. Direct expense examples are carriage inward. It's very clearly almost all direct expenses are given. Carriage inward, carriage on purchase, carriage inward, the dakhliya, naql, that means for bringing the goods to your site, and carriage on purchase, or carriage on purchase, when you buy the goods, you any expense you buy for carriage or transportation, or normal carriage. So these are very clearly given, whether carriage inward, carriage on purchase, or carriage, it is all direct, but carriage outward, indirect. Then customs duty or import duty, customs duty or clearance. Customs, sometimes you importing goods from other countries, you have to pay customs duty or import duty. It is also a part, because it's all before production, before converting to, before reaching in your conversion stage or the saleable stage. Dock charges or dock dues. There are some import or port, you have to pay dock dues when you import goods. Some, in addition to customs duty or customs charges, dock dues, clearance or dock dues you have to pay. That's also import, it is charges in the port, so that's also coming under direct. Then factory duty, any factory expenses or duty. Insurance, insurance. Then freight inward, freight and carriage almost same. Then fuel, heating, lighting. Fuel means any petrol, diesel, kerosene, or any type of energy if you use. So fuel, heating and lighting. Grease is also an indirect material used. This is also that indirect material used in production. Direct material means, for example, in making the table, you are using the wooden panel. It is a direct material, but you are using some small nails and threads and all. So this is indirect material. For example, for producing, sometimes you have to use the waste scrap or waste clothes and all in producing the machine, with working with machine, greases. This is all called grease, gas, water, or this all any indirect material like that. So gas, water, oil, manufacturer expense, any manufacturing expense or productive expense or any expense related to production, not marketing or not administration or not office. Then motive power. Motive power actually it is a energy like coal, petrol, diesel, kerosene, electricity, or what electricity and all motive power. Mainly electricity, petrol, all these energies for operating the machine. Then royalty based on product. Sometimes you have to pay for dealing the product, for you have to pay royalty for selling each. For example, if you are dealing with a bookshop, when you sell the books, you have to pay royalty to the what do you call those who are having patent, or the person who is having patent. You have to pay royalty. It's an amount paid for, because it is like an agreement. You have an agreement with him to sell the product, his product. Any royalty paid, it is a direct expense, because it is before sale, or it is a part of it's considered as a direct expense. Always royalty, very important. Direct expense most often it is confusing. Royalty expense most often I see the when we are teaching tally, ERP9, the most of the student royalty, whenever if they don't know particularly it is a direct expense, they take it as an indirect expense. Then wages and salaries, wages and salary. That's very important. Wages, if you wages is the wages, actually salary is a monthly salary. You paid periodically, monthly or weekly. Normally it is monthly. This is a salary. Wages, if you are paying time basis, daily or weekly, or normally daily, it is all weekly, it is called wages. So mostly productive workforce or employees, you are paying wages. But for office workers or administrative staff or accounting staff or marketing staff, or you are paying monthly salary. So here the most important thing, if the wages alone is there, it is direct. And wages and salaries also direct. But salary alone, if it is coming, it is indirect. And also salaries and wages, if it is coming, it is also considered indirect expense or overhead. So it should be very clear. These are all things most of the students may confuse. For example, wages, they don't know, they know it is direct. But wages and salary also sometimes they know it is a wages, it's dominant. It start with wages, it's indirect. But salary, they know it is indirect. But when it's coming salaries and wages, they confuse. They think it is same as wages and salary, or salaries and wages. It is direct, but no. If you want to very specifically, if you want to go rule, if you want to be very your gross profit and net profit, if you want to be highly very exactly, you want gross profit and not. Actually, if you make this expense, if you treat salary and wages as direct or wages and salary as indirect, financial statement will be the net income, net, or the net profit will be same. There will not be any difference, but the gross profit will be different. Gross profit, the perfection of gross profit will not be there, because gross profit, some of the portion of the direct expense, when it goes to the indirect expense, gross profit will be different, but net profit will be same. Correct? Whether you take as gross as direct or indirect. So anyhow, these things you will understand later very clearly, but try to make distinguish clearly. Wages and salaries are direct, and salaries and wages and salary are indirect. This is also a very important area where most of the students get confused. Then another this topic, will stop with this topic. This is indirect expense. It is normally called overhead. The term overhead is used for indirect expense. Actually, indirect expense or overhead is the sum total of indirect material, indirect labor, and indirect expense, or non-productive expense. The total is called overhead. Overheads are also called indirect expense or overhead. So here is not, there is no very clear, all items are not given. Some of the major indirect expense, rent. So another thing is most of the direct expenses and indirect, that we'll discuss later. Indirect expense, most of the overheads will be fixed up to an extent, but direct expense mostly it will be variable. It varies according to output, or that we'll discuss later. This variable and fixed expense, semi-variable, this classification we will discuss later. Now you understand example for indirect expense, or indirect expense also called overhead, that you have to understand. Now indirect expense, first example is rent. Rent is indirect, building rent. But if it is given factory rent, productive rent, clearly it can be considered, in manufacturing companies it can be considered direct. Human resource, all the expenses relating to human resource. For example, HRD, human resource department, connected with there may be expense salaries of administrative staff and their allowances and expense for selection, recruitment, training, promotion. All these expenses related with the HR department, it is considered as overhead. And office supplies. Office supplies means actually stationery, books, pen, pencil, and all. It is normally called this masrufat al-qartasiyya, stationery, office supplies. So as stationery, mostly the term used in place of office supplies is stationery expense. But nowadays it is in modern accounting terminology, it is used office supplies. Then it is repairs and maintenance. It is purely indirect. Taxes, all type of taxes except duties and taxes. Import duty and taxes paid for before production or importing goods. Then accounting charges, accountant salary, accounting, auditing charges, audit fee, and all these charges relating to accounting, and insurance. I mean, all the charges relating to insurance. Then utilities. Another term used is utility. This before normally we use water, electricity, and all this separately we use water, electricity, and all these things for waste, dumping wastage, or related to this wastage expenses, or all these things. But normally it is called utility expense. Mainly it is water and electricity. It is utility. All other expenses similar. But telephone expense and all, it's called in other. Normally it is not included in utilities. Normally utility, water, electricity like things. So these all coming under overheads. Now we have a lot of indirect expense in 20. I think in 28 indirect expenses are groups. Indirect expense are there in accounts. Heads of accounts are there in accounting software, tally like software. We'll discuss later. Now you understand what is an expense. There are, or cost, expense, cost. It is called two type, direct and indirect, with example this thing. Now as we'll stop here. We'll have, I think, one or two more session will be there relating to basic terms in accounting, and after that you will get a clear idea about the terminology of accounting. Anyhow, I hope you could understand. You are able to clear some doubts in this area by the session. Thank you. Thanks a lot.